participants continue to join, I'm sure they'll pick up just as part of the flow. So welcome everybody. I'm Andrea Kolness with the Coalition for Green Capital and part of the co-secretariat to the Green Bank Network. We're absolutely delighted to be able to offer this program today and very excited by the large number of participants. So we're really looking forward to exploring in this session ideas and approaches on how green banks, catalytic green finance facilities, can respond to the challenges and opportunities created by the current economic challenges created by COVID and the pandemic, and how green banks can be a key element of building back better, building back greener and stronger. So I will start with a really brief introduction to the Green Bank Network and then to our speakers that we're very excited to offer today. And at that point, pass the baton over to my colleague and partner in serving as the Secretariat to the Green Bank Network, Doug Sims from the Natural Resources Defense Council, to moderate that part of our discussion. So I think I'll start with a very brief definition, if you will, of green banks to get us all on the same page. Green banks are catalytic, climate-oriented green finance institutions that actually are often better understood as facilities or institutions versus a proper bank. And their focus is to understand the green market in any given national or subnational context and facilitate and crowd in private investment by addressing market barriers and understanding opportunities. Green banks typically offer a range of different strategies, risk reduction strategies around financial products and interventions, credit enhancements, and related project preparation and support mechanisms to open up the flow of private investment and enable that to come in at scale into the green and climate related space. Green banks can take different forms in different countries, either at the national or subnational level. They can be formed as new standalone institutions, mission specific and custom created, or they can be formed as elements, divisions, or components of existing institutions. There's no cookie cutter approach to green bank formation and operation, but rather one of their strengths is that they're adapted to provide their services in a specific market context and be tailored to the market challenges, the political structure, and the institutional capacity of any given country or state. Green banks use a range of different transaction structures and approaches, and our speakers are going to give us some examples of those today as they relate to economic recovery and their work overall. And sorry, I have to speak and move at the same time here. Just wanted to offer a quick glimpse of the kind of impact that the members of the Green Bank Network are currently having. The members of the Green Bank Network include some of whom we'll hear from today, but not all could be on this webinar. The Connecticut Green Bank, New York Green Bank, Australia Clean Energy Finance Corporation, Green Tech Malaysia, Tata Clean Tech Capital, the Green Investment Group at Macquarie, which was formerly the UK Green Investment Bank, the Rhode Island Infrastructure Bank, and the Energy Efficiency and Renewable Sources Fund of Bulgaria. In terms of the collective impact of our member green banks, this summary graphic is trying to highlight that with roughly 24 billion in public funds as invested by our member green banks, they have leveraged a total of something on the order of 70 billion in terms of actual projects financed. And this highly leveraged investment has in turn generated something in the order of 40 million metric tons of carbon reduction. And there are, of course, different ways to consider the impact of green bank activity. And one of the important ways going forward will connect to jobs and economic impacts, but it's quite useful to just at least get a quick view on the kind of impact and how we assess that at the Green Bank Network. So I will quickly introduce our panel of speakers and then hand it over so you can hear directly from them. We have Brian Garcia from the Connecticut Green Bank, where he serves as CEO. The Connecticut Green Bank is the first green bank that was created in the US, and it has a strong track record of working to mobilize private investment into green projects, improve lives, drive inclusive prosperity in communities across the state. We have Pankaj Sidhwani, the Chief Business Officer from Tata Clean Tech Capital in India. And Tata Clean Tech is a private green bank, which is wonderful to have in our mix of members, created as a joint venture between Tata Capital Limited and IFC World Bank in 2011. Catherine Hamilton serves as chair of 38 North Solutions, and Catherine has deep experience on the intersection of climate, investment, and policy. She wears many hats, but today she'll be focusing on what is happening in the US around creation of a new national climate bank. Then we have Leo Park, Financial Institutions Manager at the Green Climate Fund. Leo's been at the forefront of green bank design and creation at the GCF for a long time. And today we're really looking forward to hearing from Leo around the GCF's work with green banks in developing countries, and also get some of his insights on recent discussions within Korea on the creation of a new Korean investment bank. And finally, and I'll hand it over to Doug. Doug Sims with the Natural Resources Defense Council serves there as NRDC's Green Finance Center Director. Doug also serves with me on a team as the Co-Secretary to the Green Bank Network. Doug will serve as our moderator today. So thank you all very much. And with that, Doug, I'll hand it over to you.
Thanks, Andy, and welcome panelists. So today we're going to have an exciting panel where we have two separate panels, actually. One talking about existing green banks. We'll have Brian and Pankaj share their experiences. And then a second panel about emerging green bank initiatives with Catherine and Leo, talking about exciting initiatives in the United States and Korea and around the world with the Green Climate Fund. Before we start, I just wanted to announce a new partnership in the world of green banks. NRDC, the Rocky Mountain Institute, and the London-based Green Finance Institute are undertaking a comprehensive review of the current global potential and impact of green banks. And today we're announcing this partnership to identify the finance, technology, and policy requirements needed to globally scale these innovative solutions. We'll be publishing a State of Green Banks report 2020 in November, which will guide the development of a green bank design platform. So do follow RMI, Green Finance Institute, NRDC on Twitter to see the latest updates on that development. So with that, we're going to turn to Brian to start the panel. The panel will be structured where we'll have, again, an initial panel with Brian and Pankaj, and then we will be collecting questions during that time to be addressed at the end of that initial panel. After that Q&A session, then we'll go to Catherine and Leo, and after that session, we'll have also a chance to ask more questions. So please send your questions in, and we'll be fielding them and asking them to the panelists. So Brian, welcome. Thanks for joining today. I want to start out with your role. Obviously now we're in the COVID crisis. We're always in the climate crisis. We're also in an economic crisis. So at Connecticut Green Bank, how do you view your role in supporting economic recovery via clean energy investment? And what steps are you taking to use your investment capacity to help address impacts on developers, job creators, and communities?
Well, great. Thank you, Andrea and Doug, for that introduction. Good morning, good afternoon, good evening. I think we've got members from all over the world attending this webinar in celebration of New York City Climate Week. Just real quickly, the vision of the Connecticut Green Bank is a world empowered by the renewable energy of community, or said another way, a planet protected by the love of humanity. It is our mission to confront climate change and provide all of society a healthier and more prosperous future by increasing and accelerating the flow of private capital into markets that energize the green economy. So with regards to your question, Doug, I look at it from a macro, I want to take it from a macro view of where clean energy jobs are in the US pre-COVID and take us to the micro level of our economic development role here in Connecticut with regards to a specific market segment post-COVID, which is the residential solar PV industry. So what we're looking at here with this image is Connecticut's clean energy economy. From a US perspective, we have about 3.3 million jobs pre-COVID in the clean energy sector. 70% of those jobs are roughly in energy efficiency and 30% are in renewable energy. This comes from an E for the Future study back in 2019. But what you're looking at here is a study that's forthcoming here in Connecticut done by BW Research Partnerships that's taking a look at what Connecticut's clean energy job market looks like. So we have about pre-COVID 44,000 clean energy jobs, again, from energy efficiency to renewable energy to transportation. Energy efficiency dominates our jobs here in the state of Connecticut. Probably about 90% of our jobs are in energy efficiency. So what you can see is also, as part of that study, we asked the industry looking ahead at 2020 what their view was going to be on employment and the growth of their businesses. And clearly they were optimistic. You could see that. They felt like 2,000 more direct jobs were going to be created in Connecticut pre-COVID. But we know COVID has had a huge detrimental impact on jobs in our respective economies. So Connecticut is in fact 10% below jobs, or we've had a reduction of 10%, which takes us back to pre-2015 levels. So we've lost a considerable amount of ground. And these are specifically unemployment filings that have come into this clean energy job sector. On the right-hand side there is the solar PV industry in Connecticut. It represents about 6% of our jobs, about 3,000 jobs. We've had a little over 10% file for unemployment, so about 350 people within the solar industry in Connecticut. The Green Bank's role legislatively, statutorily, so literally the legislature said it is your responsibility to foster the sustained orderly development of the local solar industry for residential solar. So it's in statute, it's in law, it's our responsibility to support the growth and development of the industry. The residential solar industry is probably 2/3 of those solar jobs, so it's a significant amount. Just to give you a sense of the market, in fiscal year 2019, it was about $185 million in revenues, deploying 50 megawatts of residential solar. Last year, it was $200 million, deploying 55 megawatts. And this year, we're 2 months in, and we are completely behind where we were in the last couple of years. So COVID-19 has had a significant detrimental impact to this market segment. The Green Bank administers a performance-based incentive. It's actually a declining incentive block structure where we're trying to reduce incentives over time, and we've reduced those incentives by 90%, making the market less and less reliant on the need for public incentives and driving in more private investment to fill the gap. We actually monetize those incentives. So we provide incentives to homeowners and third-party owners. We then retain the renewable energy credit for doing that. We then sell those renewable energy credits to the utilities over a 15-year period to monetize that incentive back to the Green Bank, effectively securitizing that future revenue, which we do bond, and I'll talk a little bit about that later. So that incentive mechanism is a way for us to support the industry, and we're completely facing a stark, impact from COVID-19. If we can go to the next slide, this is just a look at some recent polling that we've done of the residential solar industry, specifically around the question of how would you rate the following barriers to greater customer adoption of residential solar PV. And you can see our incentive is literally sandwiched in between the phase out of the federal investment tax credit here in the US. It goes from 26% to 22% next year, and then to 0% in 2022. And then the economic uncertainty that COVID-19 has created. So the reason this incentive is uncertain is because we're driven statutorily to support the deployment of 350 megawatts of new residential solar. We're currently at about 340 megawatts, and the market is really limping along. So we're going to hit 350, and then the Green Bank is going to have to stop providing incentives that are cost recovered from the utilities. So we are taking a bold step. We've got to present to our board to help ensure the viability of this industry, that we're going to begin to take some risk, and we're going to provide incentives to homeowners and third-party owners to keep the market going, to stabilize it through COVID. And we're going to try to monetize those renewable energy credits rather than through long-term contracts with the utilities by selling them into the renewable portfolio standards of Connecticut or other New England states to allow us to cost recover. So that's kind of the dilemma we're in. We've taken a bold step. We feel responsibility for this industry, and we need to help them navigate through the COVID-19 impact.
Thanks, Brian. That's very bold and inspiring steps that you're taking to deal with this unprecedented crisis. Just wanted to remind the audience to use the Zoom chat function to provide your questions to us so we can field them in the next break. So Brian, looking forward, you've already started to answer this question, but looking forward, we're in a crisis, we're 6 months in. You have some hindsight and some real-time knowledge. What going forward should green banks be looking to do, and how should they be strengthened to aid resilience in future crises of this kind, which we surely will have?
Great. Well, if we can go to the next slide. So we can definitely be strengthened as green banks here in the US. There are local green banks, state green banks. We can definitely be strengthened by the creation of a national climate bank that helps provide us with access to more public capital that we can use to mobilize more investment, private investment in our green economies. So that is definitely important for us. We are Connecticut is one of 25 states that are part of the United States Climate Alliance. This is kind of like we're still in from a state perspective to the Paris Agreement. The USCA represents, as the slide says here, 55% of the US population, an economy that is 60% of the US GDP, which is greater than any other national economy in the world except the US and China. We emit 40% of the GHG emissions, so you can see right there we can have strong economies and low emissions, and we support 60% of the clean energy workforce. In July of this year, we sent a letter to Congress for emergency relief and green recovery with the focus on modernizing, decarbonizing, and enhancing the resilience of our nation's infrastructure, including the creation of a national climate bank. So we believe that by bringing in the federal government resources to support state, local, state, and regional jurisdictions, that we can mobilize more private investment in our economies to make us more resilient as economies.
Thanks, Brian. So I want to circle back to some of the things that you've pioneered over the years. One of those things is impact metrics. And that's also something which is obviously the headline of the ESG movement. So how can you describe to us the evolution of your impact metrics, both including your capital mobilization metrics and any other metrics you think are relevant for the audience to be aware of? And can you show, a tangible example about how you've mobilized capital in your transactions in Connecticut?
Excellent. So why don't we go to the next slide? So I wanted to talk a little bit about our E4 framework, our energy, environment, economy, equity framework around metrics. And then I want to talk about how those metrics and the delivery of that social and environmental impact comes together into a Green Liberty Bond, which we just issued several months ago. So what you're looking at here are our metrics. First and foremost, this all starts with investment. And again, I'll come back to the point of green banks using limited public funds to mobilize private investment. This challenge we have in front of us is fundamentally one of capital mobilization. So I think we, based on a UN EP study, we need to invest $6 trillion a year over the next 15 years globally in order to achieve sustainable development. That comes to $600 to $800 per person per year. So in Connecticut, that's over $3 billion a year. So we need to take the limited public resources that we have to mobilize, a multiple more, a magnitude more of private investment into our economy to achieve that target. So investment is first and foremost our key metric as an organization. And of course, as more investment comes into an economy, the public sector receives more of the resources that it needs to help provide benefits across the economy. So tax revenues in the form of individual, corporate, and sales taxes, as more investment is going into the deployment of green technologies or clean energy, the state receives more tax revenues back. We worked with the Department of Revenue Services in Connecticut to develop a methodology that reasonably estimates the taxes coming back as a result of clean energy investment in Connecticut. Economic development, obviously with the deployment of clean energy and this investment, we create direct, indirect, and induced jobs. So we work with our Department of Economic and Community Development around a metric that would estimate the job creation from investment. On energy burden, we know that by deploying more clean energy, energy efficiency, renewable energy, that we actually can reduce the burden of energy costs on families and businesses. That is, put more money back in their pockets because we are financing those improvements over the useful life of the measures. So we could actually make them better off economically day one by providing them with access to financing. On environmental protection and public health, we work with the EPA, our Department of Energy and Environmental Protection, and our Department of Public Health to develop metrics that estimate the avoided greenhouse gas emission and other particulate matter and the resulting public health benefits that come from that, the reduced hospitalizations, reduced sick days, so we quantify all that. One of the things that we're now working on is our equity metrics. So we're looking at income, we're looking at race, so stay tuned this year as we begin to roll out our equity metrics. But let's go to the next slide. So how do we use all of this? Several months ago, we issued a Green Liberty Bond. We were trying to honor the 50th anniversary of Earth Day here in the US by creating a Green Liberty Bond. Essentially, this is a type of green bond, a subsegment of green bonds. But it has three features to it. Anybody can issue a Green Liberty Bond, so it has three features to it. One is that the use of proceeds must be used to support projects that help the implementation of the Paris Agreement. So projects need to go to mitigating greenhouse gas emissions or adapting to the impacts of climate change. So the use of proceeds has to go towards implementing the Paris Agreement. The second is that the bonds need to be retail accessible. So what we typically see in the green bond market is large institutional investors coming in and buying these bonds. We want to see more regular everyday citizens being able to buy these bonds. So they need to be retail accessible. And we were really, this was modeled after the war bonds of the 1940s, where here in the US, $185 billion was raised to support the US fight in World War II. Today, that comes to the equivalent of $3 trillion in today's value. So we wanted to figure out if confronting climate change is important to citizens outside of democracy, we wanted to find a financial instrument within capitalism to enable people to express what they want to see done in our society. So the second is it needs to be retail accessible. And the third is that they need to be independently certified and verified. So because this is a retail intended product, we want to embed consumer protections into this Green Liberty Bond structure. But all of this comes together actually in our offering statement. We noted the UN Sustainable Development Goals and tied those goals to the metrics that you just saw on the prior slide as what the use of proceeds was going towards supporting. So metrics are really important. It helps us tell the story. It helps us really understand what we're driving towards in terms of delivering social and environmental profit for Connecticut citizens.
Thanks, Brian. Really exciting. Any preliminary results on the issuances of the Liberty Bonds, or what's your plan for?
Yeah, so we sold out of the Liberty Bonds, and what was interesting was that we saw more demand nationally than Connecticut. So we ended up selling $5 million of those bonds to Connecticut citizens. We had $6 million of demand from national people outside of Connecticut. We were unable to fulfill all 6 million because we ran serial bonds, 1 through 10-year bonds at specific yields. And then we had a term bond at a 15-year period. So we were unable to satisfy the national demand. So what this tells us is when we go out to our next issuance, we need a larger issuance size so that we can make these bonds available to the masses. They were $1,000 denomination value. We'd love to see that value go down, maybe even to the $50, $100 denominations, because we've done research that tells us if we do that, then we're going to see more low to moderate income families buying these bonds. And that's what we want to see green banks doing, is helping enable low to moderate income families become a part of driving the green economy.
That really demonstrates your inclusivity mandate. Thanks, Brian. We're going to transition now over to Pankaj. We're going to go over to India. Can we advance the slides? Great. So Pankaj, thanks so much for making the time to participate in this. We know it's getting late in India. So India also is experiencing the crisis that we're all experiencing. Pankaj, can you put your video on? Has your video been activated? I don't see it. Okay, great. I see it now. Great.
Yeah.
So you've had one round of stimulus in India as a response to the COVID crisis. There's unfortunately now a second wave occurring in India of infections, which may lead to additional economic hardship. What are the prospects for a green stimulus in India, and what should be in that package to best support green recovery, in your view?
Sure. Thanks, Doug, and greetings to all the fellow panelists and the participants who are joining from across the world. We just talked about, US and what is happening in Connecticut. What a fabulous presentation plan there. You are doing such tremendous work. Coming to India and coming to Tata Cleantech. Tata Cleantech, as was introduced earlier, we are a joint venture between Tata Capital and Tata Group and IFC Washington. And we are probably the only private sector climate finance institution in this part of the world. So unlike elsewhere where public money is used to leverage private finance, here at Tata Cleantech Capital, we are using private money to leverage either more private capital or leverage even multilateral capital at times. Coming to specific question of how we are likely to deal with COVID, and specifically what should be our expectations from the stimulus and how the stimulus could lead to green recovery. I think India's problems and its opportunities are very different. If you look at India's average rate of growth in the last 7-8 years, I think it has hovered between, say, 6% to as high as 8.5%. And from a situation where your GDP is growing upwards of 8%, to come to a grinding halt where your economy is supposed to do minus 10%, degrow by 10%, it's a huge development. And it needs to be seen in the context that 90% of our jobs are in informal sector. When I say informal, that means they don't have access to the regular, labor laws and regular benefits that come with usual employment in informal sector. So when economy is degrowing by as much as 10%, the sector which gets impacted most is this informal sector. And therefore, the immediate focus of any government is to see how it can sustain livelihoods of common masses. And that's where I think most of the resources are being spent. Most of the resources are being spent to make sure economic activity returns back, and the money is being spent towards asset classes where the job creation potential is highest. And I think that's been the focus. Yes, green is very important. Sustainability is very important. As I said earlier, given an unprecedented situation like this, the first focus of the government was to make sure livelihoods of common masses are secure. That is still a work in progress. So livelihoods, healthcare, and building resilient infrastructure for health are the are three fundamental priorities of the first stimulus, so as to say. First stimulus would have been better in many ways because it has chosen to focus on certain sectors, primarily because of the job creation potential that they offer. But we often miss to see the positive side of it. One of the biggest element of the stimulus was this 90,000 crore package, roughly translating to $12 billion worth of package for Indian distribution companies. Now, this package in many ways encourages renewables because even during COVID times, we've seen the if there is one sector which has been most resilient vis-a-vis any other sector, it is renewables. So governments have prioritized payments of renewable energy companies over coal companies. They have in fact backed down coal-based plants, and they have encouraged renewable plants to operate at full capacity. And now incentives are being built in the stimulus to these discoms so that they are encouraged to adopt measures around energy efficiency. To give you an example, discoms are being nudged to implement smart meters program. Now, smart meters actually is a significant tool to arrest high AT&C losses that we specifically see in Indian discom, and that is one reason why discoms continue to bleed. So that is one reform. If it gets implemented in full force, will go a long way in making sure discoms reduce their losses. The other part is direct benefit transfer. That is also being talked about in the Electricity Act, and some of the state governments have already started implementing it in bits and pieces. So that is another reform which is already being talked about. Now, what more can be done, and what could be the expectation? So, please go to the next slide. So, I would say in three parts. Okay, so let me just first cover impact of COVID. So, impact of COVID in India in short term, I think because large part of construction, large part of projects involve migrant labor. And because of COVID, a lot of people move back to their native places. It is becoming difficult to get them back given the second wave of COVID infection in India. So that is, of course, a concern in short term. But in long term, we see situation getting back to normal. We are already seeing in some areas the labor strength returning to 65-70% of what they were pre-COVID. Power demand is again, I think this year we are going to see between 4 to 5% deficit vis-a-vis last year. But in long term, as the economy grows, India's power demand will come back, and I think that's again a huge positive. On technology front, I don't think there has been any significant change. Both in short term and long term, the prospects continue to be very, very exciting. In short term, as I explained, smart meters are likely to be rolled out faster because that is one condition of the package that Government of India has announced. And in long term, grid strengthening measures are being taken. And for that also, a lot of resources are being allocated. In terms of reforms, again, both in short term and long term, a lot of reforms are being undertaken. 1.2 trillion INR, which roughly relates to $15 billion. So $12 billion that I had earlier talked about is part of this overall package, is something which is being rolled out. And in long term, we are looking at Electricity Amendment Act. So I think the long-term story of India's climate finance or India's efforts towards climate change, fighting climate change remain intact. Yes, in short term, we have a lot of challenges given such huge downturn in economy. But I think we'll tackle it. And given the messaging and given the commitment from government and regulators in the last 7-8 months, it is more than evident that they will prioritize renewables and other climate technologies versus thermal intensive technologies. So that is a huge plus. In terms of other sectors, e-mobility is another sector which will do a lot greater with some additional green stimulus. I think India's two-wheeler and three-wheeler markets have a huge scope, because these two segments alone contribute to almost 20% of vehicular pollution. And if a program is rolled out to specifically transition them towards e-mobility, it will help us a great deal. The other program which has already been rolled out is gross cost contract, where faster adoption of electric buses is being considered in various states and various municipalities. So that is again something which is already being undertaken, but if we have to make a really serious impact, we will need to do much more than that. So lack of resources is one reason, and I think once economy comes back on track, ability of the government to offer sustained incentives till such time that the market is mature and market is viable on its own will resume. The third part is,
let me just jump in, Pankaj. Sorry, we're actually a bit short on time, but the good news is that there's so much being done by the Indian government on green stimulus, unlike other countries. But can you, in just in 2 minutes, just tell us? There's so much great information here. Tell us a bit about what Tata is doing in terms of its impact and its approach to the COVID crisis, and what you see coming. We just have 2 minutes, then we have to move on to the next part of the.
So you're referring to the impact matrix, right?
Impact metrics, or whatever you think is essential to share about what Tata is doing now in response to the crisis. I know you have several slides.
Sure.
So take what you think is most material.
Yeah, if you can go to that slide, it'll be really helpful. Not this. That impact matrix. Yeah. Next slide. Yeah, this is the one. So since our inception, we have financed more than 7.5 gigawatt worth of projects. And we have financed more than 225 projects. And I think we have busted the myth that it is not possible to make money for shareholders if you are in the development finance business. So climate finance is seen as development finance, and we have successfully financed more than 225 projects. And I'm very happy to say only one of those 225 projects has turned a non-performing asset. So that's something very significant. I think Tata Capital or Tata Cleantech Capital remains probably the only infrastructure finance player in India with such low non-performing asset ratios. So these are on, and our return on equity last year was in upwards of 15%. So if you look at financial ratios, we have done exceedingly well. Even on environmental ratio, for example, against the 7.5 gigawatt plus capacity that we have financed, it was sufficient to provide power to 13 million Indian households. So that is the kind of impact we are looking at. And we have, in the process, also avoided carbon emissions of more than 12.5 million tons. Now, in many ways, so these are, what is quantifiable, but we have also contributed a great deal to job creation, because all of these projects which get financed create a lot of jobs, both in formal and informal sector, because during project finance, a lot of labor is needed. And during the operation of the plant also, both at the corporate and at the project level, you need a lot of skilled workforce. So that is how you contribute to the job creation. The other is with our specific focus on social and environmental systems, we have been able to educate the overall Indian financing space that it is important to not just finance, but also keep in mind the importance of financing with social and environmental parameters in mind. And I'm happy to say Tata Cleantech is probably the only financing entity in India which has all of its projects ESG compliant. And that helps a great deal once strategic players come and start investing in Indian climate finance markets. We've also been successful in raising private capital, multilateral capital. In terms of multilateral capital, we have raised money from Asian Infrastructure Investment Bank. We also successfully raised money from Green Climate Fund to develop India's solar rooftop market. We were the first private sector player to do that. We are at very advanced stages of raising long-term climate money from development financial institutions in Japan and US. So in a way, we have helped expand the market. We have helped create markets specifically for new segments such as e-mobility and energy efficiency. Renewable energy market is relatively mature, but for e-mobility and for energy efficiency, we have been ahead of the curve. And there again, we have been working with the government of India and other stakeholders to develop policy framework. And on the other side, we are working with multilateral institutions, DFIs, to build the right kind of financing infrastructure so that once these markets are mature, lenders are keen to participate in this market. So the idea is not just to fund on your own. The idea is to co-opt and collaborate with other financial institutions and educate them, guide them, and give them the confidence that it is safe to invest in climate finance, and it is possible to make money in climate finance. And I think we've been largely successful in that pursuit. In fact, for every $100 that we underwrite, we bring in additional at least $200 of other financiers' money. So in a way, with every lending that we do or every underwriting we do, we also bring in other private sector players. So I think that's the story of Tata Clean Tech, and from here on, we want to scale it even further by building more platforms such as debt funds and so on and so forth.
Thank you, Pankaj. This very innovative model using the public-private partnership, which I think we could all learn from, particularly in the U.S., where we have some exciting new initiatives on that front. So we're going to turn now to Catherine. We will hold questions until the end because we're running out of time. But Catherine, thanks for joining. Really happy to have you, and thanks for all the work that you've been doing in the U.S. I'm just going to jump right into the questions for you. The National Climate Bank is an exciting new proposal that's passed one house of Congress. There's been green banks proposed before, but how do you think the current community of policymakers are thinking about the role of public financial institutions in driving investment in green as part of recovery from COVID? Can you summarize the climate bank, green bank discussion in the US and what's driving it?
Yeah, absolutely. Thank you so much, Doug, and thanks so much for having me here. I'm working on behalf of a Coalition for Green Capital, specifically on advocacy for this National Climate Bank construct, and we've made incredible progress based on what's happened so far, and a surprising amount of support we're gathering, so I'm happy to talk about that. If we could go to the next slide, please. Okay, this shows a summary. So Brian teed this up really well, which is all the stuff that he's been doing in the States is what we need to do more of. We need to accelerate that. And so when the National Climate Bank was started, it's really an evolution of 10 years of work, first trying to start one on the federal side, having it not get over the finish line, but still gaining some support. But then all of this work being done in the States. There are a dozen state and local entities right now that are out there, and they have different formats. Some of them are like Brian's, some of them are CDFIs. They have all different types of organizations, all of which have been pulling in private sector co-funding and really getting projects out the door. So this would be accelerating that onto a much higher level. So it proposes there would be a $35 billion deposit from Congress, and that's over 5 years, and that in turn would drive $500 billion of investment over 5 years with private sector leverage. the green bank technique mobilizes all this private sector investment. And we don't think there's a lack of private capital out there. It's just not going to what we want it to go to necessarily, or to the people we want it to finance and to fund and to help. So this would be really a way to co-fund and get new products out there. It would also capitalize and work with all these state and local entities and help Brian get more done with what he wants to do. Obviously, the need is out there, the desire is out there. We just need to get it going. So the sectors that we're looking to for investment that are included in this piece of legislation are grid technologies. So, transmission, distribution, energy storage, renewable energy of all types, clean transportation. So that's not just the vehicles themselves, but also the infrastructure to charge them. Industrial decarbonization, which is one of those pretty hard to decarbonize sectors that can also fund. Building efficiency and electrification. Agriculture. So this is something that both sides of the aisle really like this. Reforestation, regenerative agriculture, forestry management, and then climate resilient infrastructure. Those are all of the different sectors that this bank will be able to finance. So if you could go to the next slide, please. Thanks. And Coalition for Green Capital did a jobs analysis that showed that you could create, with $35 billion of federal appropriations, you could create 5.4 million job years in 5 years across the US. This is really key because, of course, as we all know, and as is happening all over the world, we have a COVID crisis, but we also have an economic crisis that has been driven by COVID. And the way to recover and bounce back greener, essentially, is to finance all of these clean energy sectors so that you're addressing jobs, but you're also addressing the climate crisis in which we find ourselves. So the next slide, please. And as Brian said, with the Connecticut Green Bank, we know that state and local green banks have tested this model and proven the case for a federal national climate bank. So when I go in to talk to policymakers and they say, how do you know this is going to work? I say, we know this will work because the states and local governments have been proving this out and experimenting with this. And some of the experiments work and some of them have to be tweaked, but we have a lot of lessons learned and we have a lot of use cases that we can show for how you would do this. And just to be very clear that this is an entity, first of all, it's not a bank. It is a nonprofit institution that is outside of government. So this is not within the government structure, but it is outside of it so that it retains some autonomy while still getting very good oversight from the government. So it's kind of an entity that's different from any of the others currently on the federal side, but since it has been tested in the state side, we can show how the Connecticut Green Bank and others have worked to prove it. Can we go to the next one, please? Okay, and this shows a little bit more, Doug, you were talking about, has it gained traction? Yes, it has gained traction a lot. So it was introduced in the US Senate last summer, 2019, and at the very end of 2019 in the House of Representatives. It was passed in the House of Representatives in the Moving Forward Act as $20 billion, sorry, a B. And it's titled Clean Energy and Sustainability Accelerator, but basically it is the entire bill that was the National Climate Bank bill. And it was included in this 1.5 trillion package that was passed in the House right before the 4th of July. This week, it is again on the floor of the House as they pass another energy package. So it has now become very, very embedded in what the House thinks of itself as doing for clean energy and accelerating the transition to a clean future. It was also included in all of the climate plans that have been announced. So the House Select Committee on the Climate Crisis and the Senate Special Committee have both included this construct in what they are putting forward. And then in Vice President Biden's plan, this kind of construct is also brought forward. Senator Harris, when she was running for president, had it explicitly listed in her climate plan, and then she's also endorsed the bill and co-sponsored it in the Senate. Now, this sounds like it's all Democrats. And yes, this shows a lot of Democratic support. It shows a lot of support were we to have a Biden administration. But what is also notable is the House Climate Solutions Caucus, which is a bipartisan caucus of people who care about climate the climate crisis on both sides of the aisle, they have also held this up as something that they could get behind. So we see this as something, it's really a no regrets policy. It's something that's very much about bringing to bear private sector finance, about filling in gaps in the market that exist. And we think we are going to have, no matter who is leading in the future come January, that we have a really good plan for this. We have a really good proposal that we think would work no matter what, and it would bring jobs back. So the next slide, please. I'm not sure, Doug, if this is going to address your question too. Did you have another question I could address while I'm?
Well, I think it would be good to touch on the equity. I think we talked about the right side of the aisle. That's great. Another big theme now is equity. Yep. So how is the bank going to address the equity situation?
Yeah, definitely. So we have another crisis too. We have the climate crisis, we have the jobs and economic crisis, but we also have a social justice, environmental justice, and racial justice crisis all wrapped into one. And this right now would set aside 20% of all the funding to go to frontline communities and those in the greatest need. I suspect that number of 20% will grow. Certainly, there are entities out there, including the Biden campaign, that wants that to be a larger number. And I think that is absolutely probably going to happen in the next Congress, as it would be introduced with even more than 20%. But at least that's a start to really recognizing that there are frontline communities and communities where environmental justice is a real issue that need to be focused on. So we could get to the next slide. I think that might demonstrate that. So there are different criteria that you would use. The first criteria, of course, is maximize the emissions reduction. So you look at all the projects that are put into the pool. And remember, some of the funding will go to state and local entities, but some of the funding would be kept for larger regional projects like transmission projects or larger projects that affect more than state entities, and those would be handled from the national level. So you would look at maximizing the emissions reduction, and then you would prioritize the communities in the greatest need. And then the last thing you want to do is, like, you don't want to make costs go up. There's not like an economic scenario where you want costs to go up for customers. You want those to decrease. And the good news is that all of these technologies and these solutions actually are cheaper than current fossil fuel technologies. So this enables us to take these three criteria of making sure you maximize emission reduction, make sure you get it to the communities that need it the most, and then also making sure that you're not raising the costs for everybody. So let's see what's on the next slide, please. Yeah. Lots of organizations are supporting it, Doug. So we have almost 100 groups nationwide that are really behind this, and it's environmental groups, but it's also justice groups, it's also financial groups, and it's folks on the ground who really care about having a national climate bank of some sort.
That's great, Catherine. I got a question in, just so one of this. In terms of the banks or the climate accelerators, structure, incentives, what will it use to combat the climate crisis? Will it just do loans? Will it be able to do equity? Will it be able to do seed capital? What's the parameters of what it can do in the market?
Yeah, it's almost all of the above. You can come up with all kinds of interesting things, just as Brian talked about all of the different techniques that they have and different tools that they have that they can use. The national structure would be able to do the same thing. It could even do securitization potentially of assets that we could then retire sooner. There are lots of different things that it could do creatively. What it does not do is, it does not conflict with what currently Department of Energy is doing. So Department of Energy does a lot of basic research and development. It does some commercialization, some very early stage. So for example, the Loan Program Office and ARPA-E would be funding very early stage. Loan Program Office would be doing kind of super innovative early stage technologies. This fills a totally different gap. This is a gap where there's capital out there that's not going to where it needs to because a project doesn't pencil out, but it doesn't mean the project won't work. It doesn't even mean that the project's not cost effective and the project is deployable. So these are technologies that aren't, the first of its kind. They're ones that we know will work, that are clean, that just need an accelerant to get them out. And so that's the technology space it's dealing with. And then the financing space is filling another valley of death. I think of there being a million different valleys of death. This is a different valley of death than what the Department of Energy currently does. And we feel like this structure outside of the department would be the most efficient way to do this because of what we've seen happening in the state organizations.
Thank you, Catherine. Someone has asked about the report that you showed in your previous slide. And I think, I don't know if Rob, you can make that available in the chat, or we can send it around to the distribution, but it's a report by Vivid Economics. I think if you went to the CGC website, you could probably get that report. Is that right,
Yes.
Catherine? Yeah.
Yep, absolutely. Just Google jobs report, Coalition for Green Capital, and you'll find it. And you'll see that like 60% of the jobs would be in renewables and clean transportation. So that's a big chunk of it. Again, it would drive 500 billion in public and private sector financing. So, it shows that, through analysis that this could be a real driver. And we're not the only ones that are putting out reports on jobs. You'll see there are other entities out there that are sort of validating everything that we have found and all the analysis that we're doing on how many jobs something like this could create, and showing that an energy transition is clearly, a clean energy transition is clearly the way to recover economically.
Great. Thank you, Catherine. I think this is your last slide, or am I not? Am I right?
You can check and see. See what the,
Okay.
no. Listen, one more, but it's really quick. And this is just the solution slide. So we, again, think it's going to drive investment, create jobs, and enable equity. Those are big pieces of what we need to deal with right now. It's a no regrets climate policy. We think, it will pay for itself, because as you put out these financial instruments like loans, as you mentioned, they will get paid back. It'll benefit the state and local entities while also spurring regional projects. It'll augment the deployment of clean technologies across all of these sectors that I mentioned, and in communities that have typically been left behind and that are in need of resources for transition. It's embraced by a whole host of groups, as I discussed before, and we think everybody in the US will be able to benefit from the National Climate Bank.
Thank you, Catherine. That's great. That's a great summation of this very exciting development. We're going to, again, pivot back across the world into Asia. And hopefully we'll have time for some final questions to Leo Park. Leo, I know you don't have any slides, but thank you for having a late night to join this discussion. Really appreciate it. We're going to talk about the work happening in Korea and at the Green Climate Fund. Let's start with Korea. We understand there's a new initiative that the Korea Green Investment Bank is being discussed and being proposed. Again, for you, like Catherine, how do you think the current community of policymakers are thinking about the role of public green financial institutions in driving green investment as part of a recovery, although we know that Korea has had a very robust COVID response? Can you just summarize the Climate Bank proposal being discussed in Korea and what's driving it?
Sure. Thank you, Doug, again for inviting me to this event, and warm greetings from Korea. It's getting close to the midnight, 11 p.m. So I'll again keep my intervention as short as possible, so that we can leave enough time for Q&As from the audience. So Doug, you mentioned I'll be wearing two hats today. One being representative of a Green Climate Fund, and another being just good corporate citizen from Korea. So just to answer your question, so earlier this year in July, to be more precise, Korea revealed $26 billion worth of Green New Deal plan to ramp up its commitment to renewable energy and other types of green projects as a key piece of the country's economic recovery. And South Korea, in doing so, seeks to increase, for example, solar and wind capacity to around 43 gigawatts by 2025, including 12 gigawatt, from the offshore wind alone, compared to 13 gigawatts in 2019. And they expect to create around 319,000 jobs by 2020 and 659,000 jobs by 2025. So it's a very ambitious plan. And as you know, since I've been leading this Green Bank business within the Green Climate Fund, I kind of one day asked myself a question, well, I'm Korean, so wouldn't this model be also useful for Korea too? So starting from that moment, I kind of pitched this idea to influential stakeholders in the country, including climate change advisors from President's Office, public officials, politicians, and NGOs. And thankfully, a member of Korea's National Assembly from the ruling party, picked up the idea of creating, Korea Green Investment Bank to financially support the, Green New Deal plan, which I just explained. I think one of the reasons why they were interested, because the Korean government used to rely on investment funds as the, main vehicle to finance, green projects. But as witnessed multiple times, this fund model often lacked in the long-term vision. And also the government often ended up paying lots of fees, without really achieving meaningful outcomes, including very low, private sector mobilization, and as well as, job creations as well, as every panel emphasized today. And given that the Korea's Green New Deal plan is not a short-term or one-off measure, many stakeholders, they realize that they need to build a new institution with a full green and climate mandate. I mean, in Korea we do have a public financial institutions such as Korea Development Bank, Exim Bank, and the public insurance companies, etc. But they don't necessarily have a very clear green mandate, and they do finance, for example, fossil fuel projects as well. That's why we managed to get broader support from the wider group, to create this Korea Green Investment Bank. And fortunately, from the government side, the Financial Services Commission of Korea, which is in charge of supervising the financial sector, became generally supportive of this initiative. So the plan is that now the members of the ruling party are planning to submit a bill that aims to, again, create the Korea Green Investment Bank during the parliamentary session in October this year. Over to you, Doug.
That's great. So in terms of the, the design principles that you mentioned, green mandate, you mentioned crowding in private capital, both and also I think, there's some interesting discussions I understand in Korea about industrial policy, how Korea can orient itself to be a leader in industrial policy. What are the key principles that you'd like to see in the Korean Green Investment Bank, other than the ones you've already mentioned? And how should it be structured? Should it be a nonprofit? Should it be a public institution? What are your thoughts? And maybe you can bridge from that into what are your thoughts more generally in your work at the Green Climate Fund? What have you learned about what should be the general principles for green banks that apply really across different borders?
Sure. I mean, really want to thank, all, GB and the Green Bank Network colleagues, including yourself, for sharing a lot of wisdom and, track record and experience, not only from the US, but across the world. And I've been trying to apply all those lessons learned to Korea Green Investment Bank. So unfortunately, I mean, the draft bill is in Korean, so I won't be able to share that with you. But
Korean is great, Leo.
Yeah, I try to reflect, again, most of the lesson learned into the bill. So to address your question, whether it's going to be 100% public or PPP based, we don't know yet, but we at least in the draft bill, we left the door open to anyone who is interested in participating. But of course, our expectation is that a majority of capitalization would be funded by the government. And again, under the lesson learned from the U.S. Green Bank's cases is that we are trying to use the proceeds from the Korea's emissions trading scheme, replicating again the East Coast RGGI, whereby the Connecticut Green Bank and as well as the New York Green Bank were partially funded by. So that's kind of again the model we are trying to replicate, because Korea's ETS. The country started auctioning this year, and the expected revenue is around $200 million a year. So it's it's a huge chunk of money, and then we just want to make sure that it flows into the right project. I mean green project, and we want to make sure that the Green Bank, the Korea Green Investment Bank, become the main channel of this type of funding sources.
And just quickly, again, what in terms of your work, give us a flavor of your work at the GCF with green banks. What do you expect? And I guess I would ask you as well, do you think that there'll be any adjustments to the green bank programs that are in in development process due to the COVID-19 situation?
Sure. I mean, maybe I can start by quickly sharing the GCF, the recent strategy in dealing with the COVID. So basically, we have adopted a three-pronged approach to help promote green recovery from COVID. One is related to adaptive management of GCF project portfolio by allowing increased time and repayment flexibility to our partners, because it's very important to bear in mind that our partners are mostly from the developing countries. I mean, all of them are from developing countries, but of course, we do have partners from developed countries who can, help, channel our funding. So it was very important, I think, from our perspective, is to give them this kind of flexibility. And then the second is to accelerate investments with the strong socioeconomic benefits, so that our investments can help the climate and help economies of the countries that we invest in, where concessional funding is really needed. And then the last piece is to use funding from our readiness and preparatory support program to help policymakers to design the right policies to promote a green and resilient recovery. So that being said, we do believe that the Green Bank model nicely fits into this new strategy in dealing with COVID. And we do see, there is a growing, traction around the world to, set up this type of vehicle. First, because there's a very strong country ownership. Because developing countries, as we know, have been heavily relied upon, multilateral funding sources, like, multilateral development banks, etc. Of course, it's very important, and I'm sure they will continue getting support from those type of institutions. But they also something on, their own. So rather than again relying on the external expertise, they want to internalize those type of expertise, because that can always, related to creating, local jobs as well. So with actually colleagues from Coalition for Green Capital, we started this Green Bank projects in Southern Africa with the Development Bank of Southern Africa, whereby we created, kind of internal Green Bank within DBSA. So that was our very first Green Bank project. The second project, Green Bank project, is likely to be in Mongolia, whereby we will be setting a new institution this time called the Mongolian Green Finance Corporation. I do believe that we do have participants from Mongolian National Development Authority who supported this program today with us. So if you look at the capitalization structure of this Mongolian Green Finance Corporation, this can be something interesting to the audience, because it's not going to be 100% owned by the government. There will be equal funding from the government, private sector, and the GCF. So three groups will be co-owning this institution, but it will be 100% managed, by the local professionals. And other examples is Rwanda Green Bank, where we are again partnering with the Coalition for Green Capital, as well as African Development Bank. And other opportunities that we are pursuing include creation of Green Bank in Cambodia, and other countries such as like Chile, where you are also involved in creating this green investment platform with Corfo in Chile. So we are again trying to use the tools that we have, including the readiness, project preparation facility, and ultimately the funding proposal, that can provide all the equipments and tools for us to pursue this Green Bank initiative.
Thanks, Leo. I don't know how you have time to do things like this because you're so busy, but I think if you're making the time and it's midnight there, it's probably the answer. So we have 5 minutes left. We've got a couple questions for Brian, and Brian, I'm going to give you one of them, but I'm going to just instruct folks to. You have so many materials on your website about what you're doing. I think you can get a lot of information there. But I think there's questions about the what financial instruments were used for the $286 million in investments that you cited in your slides, and also some questions about the Liberty Bond. When is the next issuance going to be?
Great. So thank you for that question, Doug. God, what a lot of great things that are happening, Leo, Pankaj, Catherine. So a number of different tools from credit enhancements like second loan loss reserves to encourage local community banks and credit unions to lend up to 20 years unsecured to single-family homeowners to install energy measures that are consistent with our state's comprehensive energy strategy, to using commercial property assessed clean energy to apply a benefit assessment to a property to allow businesses and institutions to finance clean energy improvements over the useful life of the measure, that's senior to existing mortgages on a property, to securitization of environmental attributes like renewable energy credits. So, these are just a few. And, as Andrea was laying out and Catherine laying out all the green banks across this country, they're all innovating in very different and unique ways. Clean energy policy, yes, we have federal investment tax credit policy and depreciation policy and PTC, but energy policy is very local. So all these local financial institutions are very creative at trying to identify different tool sets to mobilize more private investment to do more clean energy deployment. So I just gave you a few of them. With regards to our second Green Liberty bonds, so stay tuned. Our hope is that at the end of this calendar year, early part of next year, we'll be coming out with a larger issuance with a focus on the use of proceeds lowering the energy costs for states and municipal properties to help those institutions lower their energy burden and therefore utilize those savings to support services to the community. So stay tuned for that second Green Liberty bond. But I'd invite anybody out there who uses green bonds as a financial mechanism to consider a Green Liberty bond structure, or at least carving out a piece of it to ensure that citizens can buy them. Not only institutional investors, allow citizens to buy them too, because we need to give them an avenue to be progressive and invest in the climate economy we all want to see.
Thanks, Brian. So we're going to start wrapping up. I want to just give anyone, a final chance to either make a final statement on that they omitted to include in their original statement, or to ask a 30-second question to a colleague on the panel, starting now. Okay. Oh, Catherine, go ahead.
I would just say thank you so much for hosting this. And it was great to learn about what's going on globally and also how much Brian's working on. So thank you. It was very humbling to be here.
Thank you. Anyone else?
Likewise. Yeah. Thank you. Thank you. It was heartening to hear what is happening in Connecticut, US, and good to speak to you, the fellow colleagues in the Green Bank Network. And I think that's the whole purpose of this exercise. And we all benefited. Thank you so much.
Great.
Likewise, thank you, and hope to see you in person in NYC next year.
That will be good. Everyone's invited. We're having a party next year. My place, don't worry. Okay, so as we wrap, I wanted to direct you for more information to resources that are available on the web. One is the Green Bank Network website, greenbanknetwork.org. This recording will be posted there. There are many materials there about green banks. Also, Coalition for Green Capital website has many, many great resources, as does the NRDC website. Many of these sessions are recorded from past years and earlier this year on that website, as are papers, presentations, profiles of the members. So please visit that site. Thank you so much. We'll be doing more of these virtually, so stay tuned, and thanks so much. Enjoy the rest of Climate Week. Thank you, panelists.